So if you bought gold at 5,300, I apologize. I'm sorry about you. If you bought silver over $120, I'm sorry as well. But here is why things are getting even worse. We have just come to a conclusion that the new Kevin Warsh nomination for Federal Reserve is actually a perfect expert for stock market rally, Bitcoin rally, and massive dump for precious metals. Look at this. So this person, Kevin Warsh, actually is viewed as hawkish figure. He is going to fight inflation and he is likely going to maintain higher interest rates, which effectively will reduce the appeal for investing in precious metals. Welcome to the next 20 years of holding the bags in gold and silver for the recent buyers. Why this particular nomination is very specific and why this person could actually be even more stricter than Jerome Powell. Look at this. During the restrictive economic policies of Jerome Powell, the market has seen a very interesting rally. When the restrictive policies were actually loose, we saw that a lot of the borrowing fees, a lot of the mortgage rates, a lot of credit card rates were kind of boosted. But then President Trump again put cap on credit card interest that could be top, and then you saw the big changes coming like a chain reaction. Follow up closely. After Trump announced that he will be nominating Kevin Warsh, this effectively erased all the speculations about gold hitting $10,000 by the year end, silver hitting $2,000 by the year end. Warsh's reputation for opposing excessive easing during the financial crisis, which everyone speculates about recession as well, surprised the markets, expecting a more dovish peak aligned with Trump's past rate cut demand, which effectively meant is that Trump did the biggest spin of the market. Everyone was expecting that he's gonna pick someone who is gonna ease the policy, that he's gonna make even 2-3 rate cuts. So far, the expectations were for 2 rate cuts with or without Jerome Powell. But with this particular pick or nominations, everyone got checkmate again. The Senate confirmation remains uncertain, which means that this is not the final decision. But obviously, this is the person that has the highest probability of being selected. This is why the gold sell-off was not 1% to 3% or 5%. It came down to 12% today. And this is not the end. Like I said, this is not the end. You will see gold going much lower. Not surprised that silver went down almost 40%, 37% at its peak. That's why, guys, you need to understand, nothing is easy and it's not gonna be easier moving forward. A lot of investors effectively sold. They didn't wait, okay? No one was waiting what is coming next. They already know that the scheme of trading precious metals or debasement, betting against the US dollar, it's done, it's over. Forget about it. Also, you saw the charts of the dollar have peaked substantially in major reversal. I mean, let's be clear and honest, who in their right mind, experienced financial market expert, analyst, or just simply economist, would have assumed that the US government will not support the US dollar and will not take advantage of any other potential hedge, such as gold or silver, to flush the market with them, which effectively happened. Precious metals have rallied over 200%. And that's enough, okay? That was a refresh, probably a refresh of the liquidity. People who moved a lot of money from crypto and stocks to precious metals, that they sold, and who knows, maybe they go back, maybe they will not go back, especially with this particular nominee, which in my opinion will be the one selected for the position, the Federal Reserve, which what leaves us with the expectation that these people will take their money, they already took their money, and they will be choosing, are they going to buy the dip in Bitcoin, are they going to buy the dip in S&P, or they're going to do the individual stock picking. They're going to buy the stocks with probably high upside. Just look at what happened in Nvidia today. Nvidia Remember, they promised they're going to invest another $100 billion in OpenAI, and I just read an article published 15 minutes ago. But Nvidia is kind of puzzled, not sure. Are we still want to invest in OpenAI $100 billion? And this is the first red flag, because the people in Nvidia, they're not yesterday, okay? Who is from yesterday and who has made a bunch of $1 billion mistake, Masayoshi-san and his fund. He actually promised, or he already assumed another $20 billion investment in OpenAI, and they had confirmed that their promise for $100 billion total investment in OpenAI will happen. And this is probably one of the biggest red flags for me personally, because I know exactly what happened, how this guy lost in this vision fund $20 billion plus, or maybe it was more, maybe it was less. And all it was because he was extremely concentrated on particular positions, stocks, and sector, and he was wrong about it. But of course, he didn't admit that he was wrong, and now he's, in my opinion, trying to repeat the mistake substantially. And the Nvidia people are not from yesterday. Like I said, they realize that, you know what, $100 billion, they're still gonna put some money, because the hedge, the potential upside might still be more than putting 10% of this 100 billion. So they might decide, okay, let's put $10 billion and let's see what happens, okay? Because now the first quarter, it's where, you know, the strong players who have substantial capital resources to be able to weather the storm will come into play, right? All the other weak players, people without proprietary technology, will simply fall apart. Going back to the Federal Reserve, this is completely new elements. When you know that the borrowing will get more expensive because this guy, if selected, will keep the interest rates high, all the tech firms which rely on borrowing funds, which rely on expansion, which rely on growth related to debt, which debt will become more expensive, the debt that they already have taken upon, and also they're going to be looking for more private debt. This is why they're trying to raise as much capital as possible, because they already had probably prior knowledge, advanced knowledge that this guy is going to be selected, and the Federal Reserve policy will become hawkish, and it will become much more expensive to raise funds. It will become much more expensive to grow in the next cycle of the Federal Reserve mandate. So these people are looking to scrape any dollar possible from private equity right now, because the public funds will not be available, and if available, will be so expensive because the interest rate will remain high. This is why the precious metals will be suffer even more. Wait for it.